Hey guys, this is the XRP Cowboy. Hey, this is Billy. I just wanted to show you some technicals. Clearly, I'm not classically trained, but keep it simple, stupid. That's KISS. I want to just show you something that I think is really interesting. Here we go. Okay, I want you to see something. This is a chart from back in 2018, and you can see clearly it wicks up to this line I didn't put in here, but it's a good reference because it wicks up to that. And that line is at about 20K, right where it's at right now. But the truth is the strength is where we see these candles stop. Okay, and if you go all the way over here, we're in the exact same range. We hit it here, we hit it here with the strength. So we're measuring the strength. And right here, we bounce down off of it. Bottom line is this about 20K mark. We hit it here. We hit it right here. We hit it again here, and we're at it here. So I want to explain this to you the way I see it. Ready? Dun dun dun. This is how I share this is how the Cowboy and Billy share their screen. Now this is a little interesting. You zoom out, you'll see all those numbers. See, I circled that here. Now this thing is not at 20K, it's at about 18.5 or something right here. But I circled it. Right here we get to that 18.5, 19, 18.5, 19, and back at it right here. We've been trading kind of in a range around this price point. Why is that important? Because it's implying the bottom's in. What makes the bottom? It's simple. These are all human buying emotions when people buy. So the bottom is when the smart money thinks it's a fair price. So that is why this is the bottom, because that's when the big money's buying. So now we've got some lines we put up here. Okay? One is this line. If we can break above the 20K and start bouncing off of it, that is bullish. The other thing though is we've got this triangle right here. Okay, so you can call it a wedge. It's the black line that I put in. This is a blue line. To me, this is this blue line here is actually, the true, we'll just call it trending line of it. It implies this is a massive, an important number. How about that? It's a fair market value market. I mean, it's a discounted market. It's what do you call it? Bottom line. This is the bottom. Now, yeah, we bump below it, but we've always come right back to it. And ultimately, what we're seeing here is we've got this wedge here. I call them lines, but you notice it's about to run out of time, okay? So this, I don't care who you talk to, even if you run it more up this way, whichever way you do it, it's at the end. And generally speaking, and when I say generally, always, we're going to see a breakout to the up or a breakout to the down. My money's on to the up because all the big money's accumulating here. If they wanted to accumulate down here, the price would have gone down here. So we've got a wedge here, stating it's happening, and then we have a blurred line. That's my term from this point here. Notice if you flip it upside down, you get a triangle this way with the fair line. I call it the fair money line, but it's actually the bottom trend line. You have one here that ends right here. You have this that ends right here, okay? And then you have the wide. If we set a blurred line, I know that sounds dumb and everything, but it's going to end right here. They are running into it. It's a point. These points are they're crucial moments in movement and price movement. So we need to expect something big. Now, the people that run into the camp of 15K, it's simple. They're just basing it off of this area right here, the 15K. Now, somebody wants to talk about 10K. You're going to see that we've got this right here. Place your bets. This is a great buy if they're waiting for it. But I promise, these people who think it's going to here, they're going to start buying right here, and they're going to start buying here and here. And the whole thing about it is the big whales are pushing this 18K up a little because they don't want to miss it. So they might buy at 19, you know, they instead of the 18.5, where I think it's approximately that where the true bottom is. Sure, we've dropped below it, but that was a quick movement. You know, it's a wick, a quick wick we call them. But at the end of the day, we've got so much to support this being the bottom because we know the money's buying here, or they'd buy lower. And then we also have some imaginary lines creating a point. And it is not going to go sideways from here. It just can't. It's because the point above it means it broke to the upside, the trend, or it broke below. So place your bets. If it breaks below, we got our 15. But based on all these years of, and this is implies a big move like what we've seen here. All these moves of people buying at this price, clearly didn't buy here, but all this time, I guess, with that line, and people at this point, and this point, and this point, feeling it's a fair market value. Things have changed, is what I'm saying. Live in today, not in the past. But it all matters because it's just a train of thought. So we got to have something down or the up. This tells me it's going to be the up. Everybody's accumulating here. Hope that makes sense. And I threw some logic into it. We're all going to come up with the same numbers. We just, tech guys, they just look at it a little differently.